What is happening, crypto fam? Get ready, because the news cycle is absolutely exploding, and you need to be in the know. We're diving headfirst into a whirlwind of market shifts, groundbreaking tech, and crucial investor insights that could redefine your strategy. From navigating volatile price action to unlocking powerful new tools, this is the intel you can't afford to miss. Stick around, because your next big move starts right here, right now. We've got a packed show covering the very latest, so let's jump straight into it. First up, we're dissecting the critical price levels for Bitcoin as it hovers at a key threshold, with experts weighing in on the prime moments to make your move in this unpredictable market. Then, we're uncovering a revolutionary development that's putting advanced scripting power directly into your hands, making sophisticated financial tools more accessible than ever before. After that, we're analyzing a fascinating trend showing how Ethereum is making significant waves in the institutional investment landscape, potentially outperforming its digital gold counterpart. And finally, we're taking a hard look at the subtle signs that suggest Bitcoin's current momentum might be waning, offering a vital warning for anyone invested in the crypto space. You do not want to miss this. Hit that subscribe button, ring that notification bell, and let's get this episode rolling. Bitcoin teeters on the edge. This critical price movement demands your attention. Bitcoin is currently positioned at a significant bearish threshold, a point where market sentiment and technical indicators suggest a potential turning point. For investors and traders, understanding these strategic entry points amidst such volatility is paramount. The market has been characterized by sharp fluctuations, making it essential to identify optimal moments to enter or exit positions to maximize potential gains while mitigating risks. Analysts are closely watching key support and resistance levels, with many pointing to the current zone as a crucial juncture. The prevailing sentiment suggests that while the short-term outlook may appear uncertain, strategic positioning could unlock significant opportunities. The question on everyone's mind is whether Bitcoin will consolidate at these levels, bounce back with renewed strength, or succumb to further downward pressure. This analysis delves into the technical indicators, market sentiment, and expert opinions to provide a clearer picture of where Bitcoin might be headed and what this means for your investment strategy. We'll explore the specific price ranges that traders are eyeing, the on-chain data that might signal a shift, and the broader macroeconomic factors influencing Bitcoin's current trajectory. Staying informed about these critical levels is not just about trading. It's about understanding the pulse of the digital asset market and making calculated decisions in a dynamic environment. The current volatility presents both challenges and opportunities, and by dissecting these strategic entry points, we aim to equip you with the knowledge to navigate this complex landscape effectively. Audiences are buzzing about potential entry points, with many sharing their own analyses and predictions across social media platforms, highlighting the intense interest in Bitcoin's next move. But is this consolidation a sign of strength or a prelude to a bigger move? Stick around as we uncover a groundbreaking development that puts powerful scripting tools in everyone's hands. Programmable Bitcoin is here. This innovation democratizes advanced scripting for all users. Nunchuck Wallet has officially announced the integration of native Miniscript support, a move that promises to unlock a new era of customization and security for Bitcoin users. For those unfamiliar, Miniscript is a powerful policy language developed by core developer Pieter Wuille, designed to simplify the creation of complex and secure Bitcoin scripts. It acts as a higher-level programming language, abstracting away much of the complexity inherent in Bitcoin script, making it more accessible and less prone to errors. By breaking down common script components like signature locks, time locks, and hash locks into composable elements, Miniscript allows users to build custom scripts with a high degree of confidence in their predictable behavior. Nunchuck Wallet is rolling out this feature with two foundational templates: a decaying multisig, where fewer keys are required to spend funds as time passes, mitigating the risk of key loss, and an expanding multisig, which allows additional keys to be authorized over time. Beyond these templates, advanced users have the flexibility to import their own custom Miniscript policies. This robust support extends to both native SegWit and Taproot wallets. Hardware wallet compatibility is also a key highlight, with Coldcard, TapSigner, Blockstream Jade, and Ledger supporting native SegWit Miniscript, while Coldcard and Ledger will also support Taproot Miniscript. For those looking to leverage advanced cryptographic techniques, MuSig2 support is currently limited to software-only keys. Nunchuck's end-to-end encrypted communication system is fully integrated with Miniscript templates, facilitating collaborative wallet construction and usage. To further empower users, Nunchuck has published a comprehensive 101 technical guide and pointed to Pieter Wuille's resources for those eager to dive deeper into the intricacies of Miniscript and its associated tools. This release signifies a major step forward in making sophisticated Bitcoin functionalities available to a broader audience, enhancing security and user control. Community reaction has been overwhelmingly positive, with users eager to explore the new customization options and the enhanced security features Miniscript brings to their Bitcoin holdings. But is this a sign of things to come in the institutional space? We're now turning our attention to how Ethereum is making its mark in the world of institutional investment. Ethereum's institutional advantage emerges. This trend highlights a potential shift in institutional asset allocation. In the burgeoning landscape of institutional cryptocurrency investment, Ethereum appears to be carving out a distinct structural outperformance compared to Bitcoin. This emerging trend is particularly noteworthy in the context of the recent approval and launch of Bitcoin exchange-traded funds, ETFs, in the United States. While the introduction of Bitcoin ETFs was a landmark event, signaling mainstream acceptance and providing easier access for institutional capital, the subsequent market performance and investor flows suggest a growing appetite for Ethereum-related investment vehicles. Analysts are observing that institutional investors are increasingly allocating capital towards Ethereum, driven by a variety of factors. These include Ethereum's role as the backbone of decentralized finance, DeFi, and non-fungible tokens, NFTs, its ongoing transition to a more scalable and energy-efficient proof-of-stake consensus mechanism, and the anticipation of future upgrades and developments within its ecosystem. The narrative around Ethereum is evolving beyond just a store of value. It's being recognized as a platform for innovation and a crucial component of the next generation of the Internet. This broader utility and development potential are attracting significant institutional interest, leading to a perception that Ethereum may offer more diversified avenues for growth and yield compared to Bitcoin's primary function as a digital store of value. The market is responding to this narrative, with capital flows and asset under management in Ethereum-focused investment products showing a more robust growth trajectory. This structural outperformance is not necessarily a zero-sum game between Bitcoin and Ethereum, but rather an indication of the diversifying strategies employed by institutional investors as they navigate the cryptocurrency asset class. As the institutional adoption of digital assets matures, the unique value propositions of different cryptocurrencies are becoming clearer, and Ethereum's multifaceted utility is positioning it favorably. The ongoing developments, such as the potential approval of Ethereum ETFs, could further catalyze this trend, solidifying its position in institutional portfolios. Discussions are intensifying on whether Ethereum's utility-driven narrative will continue to attract institutional capital over Bitcoin's established store of value proposition. But what if the momentum for the market leader is starting to fade? We're now shifting gears to examine the subtle indicators suggesting a potential correction for Bitcoin. Bitcoin's momentum shows signs of weakness. Investors should exercise caution as potential correction looms. Recent market analysis suggests that Bitcoin's upward momentum may be showing signs of weakening, prompting a cautionary tale for investors who have benefited from its recent price surge. While Bitcoin has demonstrated remarkable resilience and growth, certain technical indicators and market behaviors are now pointing towards a potential correction. This could manifest as a period of consolidation or a more significant price pullback. Experts are advising a careful approach, emphasizing the importance of risk management and the need to stay vigilant about subtle shifts in market sentiment and trading volumes. Factors contributing to this potential weakening include a decrease in new buyer interest, a rise in selling pressure at key resistance levels, and a general cooling off of speculative enthusiasm that often accompanies rapid price appreciation. The broader market context, including macroeconomic factors and regulatory developments, also plays a crucial role in shaping Bitcoin's trajectory. For investors who have entered the market at higher price points, understanding these warning signs is critical to avoid potential losses. It's a reminder that even the most dominant assets in the digital space are subject to cycles of growth and correction. This period calls for a strategic reassessment of portfolios, potentially involving taking some profits, rebalancing positions, or preparing for potential entry points should a correction present a more favorable risk-reward scenario. The focus is shifting from chasing immediate gains to preserving capital and making informed decisions based on evolving market dynamics. The narrative is moving from pure bullish exuberance to a more pragmatic outlook, acknowledging the inherent volatility and cyclical nature of the cryptocurrency market. Investors are encouraged to look beyond the headlines and delve into the underlying data to make sound judgments. The community is actively debating the possibility of a correction, with many sharing charts and indicators that suggest a bearish turn, while others remain optimistic about Bitcoin's long-term strength. That's all the top stories for today. Don't miss out on our next episode. Hit that subscribe button and ring the bell. All right, everyone, that's a wrap on today's crucial updates. We saw Bitcoin hitting a bearish threshold, Nunchuck Wallet bringing programmable Bitcoin to everyone with Miniscript, Ethereum showing structural outperformance in the institutional ETF era, and Bitcoin's momentum showing signs of a looming correction. Stay plugged in, stay informed. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, and ring that notification bell so you never miss an update. Plus, follow us on all our social channels for more real-time insights. We'll see you in the next one.